Alright, let's take a closer look at the income statement of Carvana to do a deeper analysis into this company. And I found one interesting insight when I took a look at the data, so I will share that one today. And then also a quick few bonus facts. So thank you for reaching the like goal on the surface look at this company. If we take a look at the first line here, we can see revenue. And revenue is always important to investors. However, in this case, the market is worrying about the bottom line and not the top line as much. And as you can see, we have a decrease in revenue, which of course is correlating with stock price going down. This is not good. However, the interesting thing and the thing that I was surprised by is found here in the bottom line. We can see that cost of goods sold actually decreased a bit here from Q1 to Q3, of course, but we can see that depreciation and amortization increased by a lot. And if we take a look at the business side to see what this corresponds to, we can see that the price of used cars decreased by a lot. And in this case, this means that the company has to write down the value of their inventory that they have on their balance sheet. And this is what's being reflected in this post. You cannot sell the cars for as much as you used to. This is not something that affects cash flow. It's not like they have to pay interest or salary to employees or anything like this, but it's still recorded as a loss. And we can see that it jumped by almost double here from one quarter to another. And this indeed affects the bottom line. So it's not as bad as it looked at a surface glance when I first started looking at this company. And then we can also see, of course, cost of goods sold. The margin is not fantastic in this case. We can see 3.3 billion here, and then we have 3.0 billion just in cost of goods sold. As to be expected for a car dealership, however, this will make it harder for the company to turn a profit. And with rising interest rates, it would be good to have positive cash flow from the operations side. As for operating expenses, of course, this will be the selling and general expenses. It costs money to employ salespeople. They need a salary. And in this case, we can see 500 million here in selling expenses. So it's not a huge cost given revenue of 3.3 billion, but adding this to 3 billion, we have 3.5, and that means that we have a negative result from operations. And given the big sales numbers, the operating income here of only 0.3 billion in loss for the quarter is quite the small one. And there is indeed potential to turn this around by making the company more lean and cutting back, although this will also hurt top line and growth. So we're in an interesting situation here for this company. It's very risky indeed. And just out of curiosity, I also took a look at shareholder equity and found that it was indeed positive. We can do this by subtracting the liabilities from the assets here, total amount of liabilities, total amounts of assets. And you can see that total equity, also known as shareholder equity, is indeed a small positive number in this case. Not as bad as companies such as AMC, where they're deep in the red on shareholder equity. So this is a positive sign for investors, although this company is still an extremely risky investment. Just a quick look at cash flow as well. As we summarized here, cash flow from operating activities has indeed been quite negative here, and you can see that this number is smaller than what you might have thought it would be in the income statement. But remember, the amortization and depreciation is not something that affects cash flow, so we're adding this back when we're looking at it. So in terms of operation here for Q2, they actually had positive cash flow. And then of course investing activities, if they're growing, they're investing to gain access to be able to cover new markets. This of course costs money. We can see that investments have slowed down quite a lot here in Q3 compared to Q2. And then of course financing activities. This can be things such as paying interest, and we can also see cash dividends in this, although they're not paying finance cash flow items total. Issuance, retirement of debt. All right, interesting. So this is paying back on loans and also taking new loans. So you can see a positive number here in the cash flow is them taking a loan, and then a negative number like here would be them paying back on their loans. So they actually paid back on their loans in the last quarter here. Interesting company, positive shareholder equity, razor thin margins, but let's take a look at statistics. I just wanted to show the price to sales ratio. Take a look at this column, this vertical right here. So in the past, when share price was higher, we can see that this was indeed quite expensive even for a growth company here when the used car market was on fire. I've seen price to sales of around 2 for a lot of growth companies that I like. And in this case, when stock price absolutely dipped, when we divide that with sales, we get a very, very small number. Remember the total amount of revenue and the market cap. We can see that 0.05. This is trading extremely low. And if the company can survive, we're in value territory. This is a very risky investment right now. It's an extreme gamble. If this company manages to turn around, then you're basically picking this company up at pennies on the dollars at this valuation. But remember, shareholder equity here, I took a look at it at macro trends as well. We can see that there's not a lot of equity in the company, 374 million. We can take a look at market cap here of 1.2 billion. It's interesting. It's interesting to say the least. I think that some of the people who really enjoy to gamble will like this company. For me as an investor, I will not dare to invest still due to the high risk of loss of total principal. However, an interesting gambling opportunity indeed. I hope you like this deep dive into the income statement and the bonus facts about some of the key valuation ratios. And as always, I hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.